And joining us now from California is Congressman and Democratic Senate candidate Adam Schiff. Well, Congressman Schiff, a couple of things have come up today already, that executives from this bank took bonuses on Friday or made stock trades to limit their exposure to all of this. Is this something you're looking into? And what about correcting the changes in Dodd-Frank that took place during the Trump years? The president has talked about that.
It is something I'm looking into, and in fact, I plan to introduce legislation to claw back those earnings from these late bonuses from stock trades that were beneficial in the run-up to this run on the bank. I think we have, as the discussion that preceded this one indicates, in my view, a failure of oversight as well as a failure of the bank's management, and they need different remedies. In terms of the failure of oversight, I think we need to strengthen Dodd-Frank. I oppose those changes that weakened it in 2018, and I think we're seeing some of the consequences of that now. So we need to strengthen the regulatory and oversight requirements on banks like SVB. But also, this was a colossal management failure, and I think we have the wrong incentives that incentivize management to take risks with their depositors' money, to get bonuses when they do take those risks. And to the degree that it's baked into a bank executive's mindset that, well, if all goes wrong, then maybe we could just count on Treasury to bail us out, even if it doesn't involve taxpayer money, to bail us out with the bank fee supported funds. That's the wrong incentive. So the legislation I'm working on would claw back this executive compensation, bonuses, stock sales, so that defrays some of the cost of these kind of rescues.
Does this tell you that Elizabeth Warren, Bernie Sanders, and others were right about a lot of the banking regulation?
Well, I think they were certainly right that weakening Dodd-Frank was a mistake, and I think we need to strengthen it. We will be analyzing the degree to which that repeal of a portion of Dodd-Frank in 2018 contributed to this. But certainly the problem, the danger of systemic issues like this hasn't gone away. And that ought to tell us that we need to move in the direction of stronger oversight and regulation, not weaker. And that is something I'm discussing with Maxine Waters, the ranking member on the Financial Services Committee, about a broader package of reforms to address this recurrent problem. I think we also need to look at FDIC insurance and cover more than just depositors, but nonprofits, and payroll for workers to make sure that those things are protected against these management practices.
Yeah, well, I'm sure that this is an issue that you pretty much agree with Katie Porter, one of your rivals, let's say, for that Senate bid right now in California. But what do you do about the House Republicans?
Well, I would hope, but who knows, that in light of this, a run on now two banks and panic among others, that there'll be bipartisan support to look for remedies to once again strengthen oversight and regulation. But look, the Republican Party has been consistent really in only one thing. Most of their ideology has gone out the window in the year of Trump. But the one consistent thing pre-Trump, during Trump, has been they answer to their wealthy donors. And so I am skeptical of how much Republican support we're going to get, but we need to try to get this done. And in the House right now, we can't do it on our own.
And tell us about your briefing with the Treasury yesterday and what questions were being raised and how satisfied you were.
Well, I think that Treasury, in the two briefings that I participated with Treasury, with FDIC, initially we're, trying to maintain a strong face that they're much better situation now than in the last meltdown, and that they were really, I think, frankly, downplaying the systemic risk, but then quickly reached the conclusion that no, the systemic risk was pretty profound here, and they needed to take a bold step to try to deal with it. I think most of us in the delegation were very concerned, remain very concerned with what this will do to the entrepreneurial economy, but also that we've created the wrong incentives here. And these incentives for, as we saw with SVB, to invest in these securities that were long-term, that were vulnerable to interest rate changes, that may have been very profitable for the bank in the near term, and it was, but it put all of the depositors, including a lot of people who didn't even know that the payroll was handled by SVB, really deeply at risk. And so I think among our delegation, we want to make sure that those small businesses and nonprofits are protected. But we also recognize the broader need, and that is this bank did serve a valuable function within the entrepreneurial economy in California. We need someone to step into that role, but we need them to do it far more responsibly than SVB.
Congressman Adam Schiff, thank you very much.